is the market rallying? And that's the deep dive I dove into last night, and I think I figured it out. Okay, so here's what we want to look at. Today's tape saw a rare rise in bonds. We had bonds increasing in price during bringing down the yields. We also had a stock market doing really well. Below is a quick, easy to read navigation of what happened yesterday. So let's go down through here. What lifted equities yesterday? Well, earnings momentum. We're going to get a slew of earnings the rest of this week. So earnings is a huge piece of this. Better than feared Q3 prints. A lot of people were thinking, okay, tariffs are going to kill the momentum on earnings in Q3, Q4 of this year because of the tariffs implemented at the beginning of the year. Well, they're not yet, but we're going to look at those here in a second because I have a slew of earnings coming in this week we really want to focus in on. But then we have mega caps leading the way. We have huge companies leading the way, coming out with earnings every day saying, okay, we beat expectations. So that means on that side, maybe the consumer's a little bit better. Maybe the inflation isn't as worse. Let's keep going down through here. Here's where it kind of starts kind of piecing together. Softer rate fears, easing yields, lower discount rates, and support valuations. So the lower rates are, well, the higher the stocks can go because of valuations. I'll explain that here in a second. And improved sentiment, calmer headlines around trade, deficits, wars, and everything else. Why the bond market rallied? Here, let me get my head out of the way now. Lower rate path odds. Market paced less hawkish Fed projections, growth of inflation, quality bid, ongoing demand of duration in macro uncertainties. I'll explain this in English in a second. Inflation expectations anchored. Break even and surveys remain contained. Positioning, short covering tactics. So here's what's happened. A lot of people jumped into the bond market and they're like, we don't know what's going to happen. We think inflation's going to uptick a lot more than expected. So they were manipulating the bond market and actually shorting the market, hoping that the bond prices went in the wrong direction. Well, they were wrong. So when they're covering their shorts, that helps the bond market as well. So here's, in a nutshell, here's what's going on.